Hi traders, welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to help bridge that gap between the macro and what's going on in the FX markets and how you can make that actionable and tradable. So we're kicking it off today. We're actually revisiting a chart from yesterday for the start before we go into our main subject about where is gold heading next. But I wanted to talk a little bit about pound US dollar. Yesterday, we did this breakdown of analysis that we expected a pound rally. And look at this. Price has burst higher yesterday. It's actually one of the strongest currencies against the US dollar, and it rallied 190 pips. So if you did manage to get any kind of trade in on this one, this was a really nice market to have a little look at yesterday. We were looking at the potential for the market just to pull back down a little bit further. But when we did see this breakout of this 4-hour chart, nice little consolidation then, and then down into your hourly chart, you can see that price kind of formed a little bit of a sort of ascending triangle pattern where we had this kind of base area around this kind of 134.10 with those higher lows. As soon as price broke out of those, the market started to push back to the upside. So nice little move there. You can see that pattern just forming. Nice little breakout. If you did take that breakout long, stops below the low, you had a really nice run up to the upside. And this was all driven really by that recent data out of the US with that PPI coming in a little bit softer, and we saw the US dollar weaken once more. So pound still pushing nicely to the upside now, where I'm looking for opportunities here. If I just go to the daily chart, we've now completed that little inverse head and shoulders pattern we were talking about, where we saw the left shoulder coming in, the left shoulder low coming in at that 133, head coming in at 131.59, and then the right shoulder coming in around about that 133.50. We've now broken that, and we have that nice sort of neckline area, which is sort of a descending trend line. But if we look at where that kind of support comes in, it's probably around about that 134.25 handle. So looking at this now, is it a long right now? Probably not, because price has obviously moved a significant way. But what we can do a couple of things. First thing is we can mark up those swing highs in here. And again, if we go into the properties, we can change that to 134.25 or 134.25. And that could be a good level to watch. If price does come back into this level of support here, then we can look to go long. Targeting, remember, we're targeting that weekly area of resistance towards that 137 handle. And that's largely down to the fact that we have a big range developing within the markets. Plus, we have the commitment of trader report showing aggressive selling of hedge funds, which was down at that 131.50. And you can see since then, really, price has reversed quite significantly from that point. So this COT extreme signal is playing out. Price is now 418 pips above that previous or above that level of 131.50. So market's really pushing higher here for the pound. Really like long ideas on this. So looking for some more. If I just bring on the adjustable market profile here, let's have a little look at where things stand from this chart. So if I put it on the swing low, that candle low of the 24th of June, and expand it out to current price highs, you can see we have the value area high around about that 134.50, and we have the point of control at 133.50. Value area low towards 132.44. So I don't necessarily think we're going to get all the way back down there, but that gives us a couple of extra levels to work with. For instance, if price does pull back, break through the value area high and trade a little bit lower, maybe we could look for longs around about that point of control at that 133.50 for a continuation to the upside there on cable. So I really like this market still for a long. I just wanted to point that out because yesterday we spoke about it. Yesterday we talked about the idea that we could get some action going on in and around that area for a potential long opportunity, and obviously price has now broken through and moved higher. So yeah, like the idea of continuing to be a buyer on this particular market. We also obviously talked about other markets as well. So we talked about pound against the Australian dollar. That one also did rally, didn't meet our area of support, unfortunately. We were looking to be buyers towards 191.25. Price came a little bit short before rallying to the upside. So unfortunately didn't manage to trade against pound Aussie, but that market again, since we spoke about it, is up 190 pips as well. And another market we were talking about was shorting euro pound. Unfortunately, again, just didn't manage to catch the move here. But since we spoke about it, price has fallen 90 pips to the downside. So pound strength still remains for now. And if it continues, then we could see a deeper move for the rest of the few days ahead. So keep an eye on it. You know, watch your lower time frame, see if you get any kind of trend breaks to the downside, any kind of retests of any key areas, and look for some further opportunities on those. Pound yen is also rallying up, which is quite interesting to see. Pound CAD was another market of interest that is up 200 pips. So yeah, pound really had just a great day yesterday. So moving on to our subject of today. So we were talking about, or we wanted to talk about, where is gold heading next? Now, yesterday I actually went long on gold. I'm going to show you that trade, and then we're going to have a little look at where it could possibly go going forward. So I ended up buying gold yesterday after it rejected the day's point of control at $4,030. So the reason why I went long was because we had that PPI data come out, right? So let me just bring it onto the screen. Let me just go to yesterday. So we had the PPI data come out, right? And it came in a lot lower than expected. So core PPI year on year fell, well, actually rose to 4.7%, but was way below forecasts of 5.2%. And then we had core PPI month on month coming in at 0.2% versus the 0.4% forecast. And PPI month on month came in at minus 0.3%. It's forecast to come in at 0. So that dropped significantly, which is to be expected considering fuel prices have also come down aggressively. Obviously, core is actually showing a little bit of an increase from the previous numbers. But, you know, that being said, they did get some revised figures there as well. So interestingly enough, we saw the US dollar start to fall. Now, I was really keeping my eye on yesterday, these US 2-year bond yields. And what I noticed was we had a very similar reaction to that of the CPI, right? So CPI came out, bonds fell, or bond yields fell from around about 4.28% all the way down into the 4.15%. So around about 3% drop. And then the market started to kind of make its way back higher, right? Very, very slowly starting to pull back. We started to see that move coming all the way from the 4.15% up to the 4.25s. So dollar was starting to gain a little bit of strength again across the board. We then had PPI come out, price fell again on the yields, and it broke down through this area here, through these kind of lows, and actually down towards 4.12%. So that's the lowest we've seen the US 2-year yield since the 6th of July. So that pushed the US dollar lower. And what I noticed was US bond yields were falling, but gold was actually falling at the same time, and it was pushing back towards this level of support. So I was looking at the current day's market profile, and I was looking at the fact that we had this accumulation building up throughout the sort of European session going into the US session. And then we had the data, and the data pushed price aggressively higher, 333 pips. We moved from $4,037 per ounce to $4,067 per ounce. So nice little sort of $30 move there in price. But like I said, yields were still falling, but then gold prices started falling as well. So I thought actually that's a little bit of a contradiction there. Usually what you would typically see is that when bond yields fall, gold would rise, and if bond yields rise, gold will fall. So it was unusual to see them both falling at the same time. So that gave me a trade idea. I was like, hang on a minute, if bond yields are still going to fall, then gold should be bullish. So what I ended up doing was placing that market profile on. I could see it was a bit of a double distribution day going on, but the point of control was down towards that $4,030 level. I waited to see how price would react to it, and it did. It kind of came in, rejected it, closed back above the point of control. So I took a buy stop order above the 30-minute candlestick high, placed my stop loss below the 30-minute candlestick low, and then went and targeted up towards another strong level of resistance, which was formed from, let me just show you, which was formed from this market profile level in here. So you can see actually towards that kind of $4,075 level, there was a strong high volume node building through there. So I like the idea of seeing price kind of reject that, come up into that level, and it did. I ended up taking profits a little bit earlier. I also added a trailing stop on this so that if price was going to move aggressively, my trailing stop would go with it, and it did. But I did come out a little bit earlier because I was going out to watch the England game. So I wanted to close the trade before I did that, but it would have gone on and hit full 2-to-1 targets anyway, if I just show you that. So my stop loss was actually, original stop loss, sorry, was actually below the swing low of the day, the daily low. So it was a 2-to-1 risk reward trade. If I had it below the 30-minute low, actually it would have been more of like a 3-4-to-1 trade, which would have been even better. But cautiousness, obviously I like to put my stops in a safe place. So that was where my stop loss was. So where we think about where's gold going next, it still drives from the fact that what is the US dollar doing? What is the bond yields doing? And we have another big day for data. And what I mean by that is, if we have a little look at what's coming up for today, I'm just going to take the filter off here of medium and just put high impact data. You can see we have retail sales coming up today, right? So we have initial jobless claims coming out at 1:30 p.m. Forecasts are expected to see a decrease to 217. An increase from 215 to 217. So looking at that, we're looking for, there is a high and low side as well. So low side is 205, high side is 225. So really speaking, if we get 225 and above, that is going to be bearish US dollars. And we could see a little bit of negativity from that. But we do have retail sales. So we've got retail sales, ex gas and autos. That is forecast to come in a little bit lower as well. So again, if we do come in around those forecasts or lower, that could be pretty negative. So looking at this, I think actually all the data really is pointing to negative data. So the surprise is going to be to the upside. If we get the beat, then the dollar could be a little bit stronger again. US yields could rise. If we get the forecast and the miss to the downside, then we could obviously see the US dollar weaken a little bit further. So that's what I'm going to be looking for today, really. I won't be trading gold necessarily until those events, but what I will be keeping an eye on once more are those US yields. If we see another day like yesterday, where the US yields, especially the 2-year yields, start to break to the downside and start heading more towards 4%, big round number of 4%, then that should be bullish gold. And in that case, and in that scenario, I want to be looking to go long. Now, there's a couple of ideas that we can look at in terms of how could we get into that trade. And there's a couple of levels I want to point out. The first level is going to be sort of around about this $4,015 level. That is an untested point of control from the 14th of July. So that could be a level of support. So if price comes into this level and rejects it, then we could look for breakout opportunities for an idea along there. Okay. Second idea is actually waiting for the $4,000 level. As you can see, on the 14th of July, we had this kind of accumulation. So it's over the 13th and 14th, around about that $4,000 level. So if I actually just expand the market profile to include that, you can actually see the point of control shifts down to that $4,000 level on the market profile. So that's another strong level of support. So what I'm going to be looking for, what my trade plan is today, let's say retail sales come in worse than expected and we get a knee-jerk reaction on gold to the upside. I'll be looking for a very similar trade like I did yesterday, wait for price to pull back into the accumulation area of today, and then look for long opportunities. The second thing is, if price continues in the morning and in London session and throughout the European session, just breaking down on gold, then I'm going to be looking for that $4,000 level to potentially react as support if we do see, obviously, the rejection or we do see that data coming in as expected. So that's kind of my trade plan here on gold today, looking to see if price can come into these key levels and find some support. Now, let's move on then. Let's move on to the big story. And I'm actually going to flip this back to pound. Okay, so the big story, we've talked about pounds already and covered it a little bit today, but let's cover it in a little bit more detail, because this could be a story where we see a continuation move. So basically what we need to look for is data now that kind of backs up what is happening. And we've had some data recently. If we look at the data today, we've had GDP data. Okay. So this morning at 7 a.m. GMT, we had GDP month on month, GDP 3-month average, and the GDP year on year. And guess what? They all came in better than previous, right? So if we take a look at the GDP 3-month average, the forecast was actually 0.5%, and it came in at 0.7%, right? GDP month on month was expected to be 0.1%, came in at 0.1%, but beats previous of minus 0.1%. GDP year on year rose to 1.3% versus the previous 1.1. Came in a little bit lower than forecasts at 1.4, but still better than the previous. So what we're actually seeing in the UK market is growth is starting to, show itself, which was a big problem a lot of the time for the central bank. Now, if we take a little look at the interest rate tracker, we can have a little look at the Bank of England. Okay, so there's a 90.4% chance of a hold in the next meeting, right? And there's a 9.6% chance that we're going to see a interest rate hike. However, it is leaning a little bit more neutral to hawkish. And we did discuss this a little bit yesterday with some recent data coming out of the Bank of England, which suggested that they are going to take a bit more of a balanced outlook on the economic situation. And we can see here, it says the emphasis on importance of growth and acknowledgement of risks related to inflation and geopolitical landscape. So seeing that good growth coming in is a positive for the Bank of England. Now, if we take a look at the United Kingdom indicators and we take a little look at the inflation rate in the UK at the moment, it was coming down. Okay, so we were in the highest point we saw was really 3.8% in 2025. Since then, it has declined significantly, and we're around about 2.8%. So inflation rate is within that target range of 2 to 3% at the moment, which is why we're not really seeing any kind of aggressive sort of tone from the central bank. If that was higher, if that was 3.3, 3.4%, I think we would definitely see the Bank of England talking about potentially increasing interest rates. The employment situation in the UK as well. So if I just go to Labour and we go to the unemployment rate. So the unemployment rate fell to 4.9%. Okay, so actually the Labour economy or the Labour statistics in the UK is actually pretty good too. So that could be a positive to see why we've seen this positive growth. Okay, because unemployment is falling, which is usually a bit more of a positive. So Bank of England remaining a bit more data dependent. They're a little bit more positive than most. And when we take a look at, let me just log into my Markets Made Clear platform and we can have a little look at the seasonal pattern for pound, which is a big reason why we were looking for long ideas as well, because we've had a lot of positive data going the right way. So not only did we have this positive data, we have the seasonal pattern, which suggests that from around about the 9th of July to the 27th of July, price rises and it has an 80% win rate. So over the past 20 years, it has 16 wins, 4 losses, average gain of 1.5%, max profit 2.9%. And even on drawdown years, it's still not that bad. The average loss is only minus 0.9%. Now, over a 20-year period, it only has a 10% correlation. But if you put it on all years, it has a 79% correlation. And you can see that typically the pound can rally until the 29th of July. So I still like the idea of price remaining within that weekly trading range. And, we've got the seasonal back in it. We had the commitment of trader, sentiment, extreme short position from the hedge funds. And then also on top of that, we've got good data. And on the currency strength meter, it's the most strongest currency. Everything's flowing for the pound at the minute. So I still want to be a buyer of that market for now. And this is a really good way of how you can, build a bigger picture. And all now you need to do is just find currencies that are weaker than it. We already know that the Australian dollar is a little bit weak. The Swiss franc, the CAD, a little bit weaker currencies at the moment. So trading against those markets makes sense. Let's move on to the final part of our day then, which is the skill of the day. I've only got a few minutes remaining of the stream, so let's just go through. And I want to talk a little bit about market profile and the key levels and what market profile shows us. So I'm going to use this example here on the pound at the moment. You can see I put my adjustable market profile on, and you can see a few lines. So the first is sort of this dotted line at the sort of boundary here. And then you've got a lower dotted line as well. Now you can see within that boundary, we have a big blue area with a big red line going through the middle of it. And then on the outside, the upper and the lower parts of that boundary, we've got a different color. Now, market profile basically tells us how long the market has spent within a particular area, okay? And what it's based off is 70% of all trading is within this value area high and value area low of any given point. So if you were to draw a market profile on today's session, and it will show you where 70% of most trading has been done, which is really helpful because obviously these markets are driven by large speculators and businesses and hedgers, X, Y, and Z. So if the market has been accumulating around a specific point, then that means there's been a lot of trading activity around there. That's why the point of control is a highly sort of used reference when it comes to market profile, because that shows you where the most trading has been done within that given period that you've selected. That means it could be a strong level of either support or resistance. Now we have the value area high as well, which is a key area of support and resistance, and the value area low, which is also a key area of support and resistance. Now, there are many ways to use market profile. One of the ways is to wait for a breakout of an accumulation area and a retest of either of those key levels, including the point of control. Or you can look at it in a different way where, let's say, if you're looking at it from a session point of view, and if price opens outside of value area, right, there is a more or a stronger possibility that we're going to see a trend continuation. If price opens within the previous day's value area, then there is a strong possibility that we're going to see a range develop throughout the day. So it can also help you set up what kind of trading day that you can have. Okay, so if you don't know anything about market profile, I really suggest that you go and take a look at it, have a little read up about it. There are some great studies out there, and especially one particular trader who created the market profile. Let me just get that up. So yeah, market profile was created by J. Peter Stedlemeyer, a trader from the Chicago Board of Trade, in collaboration, and he created it for the futures market. Basically, he's trying to find those key points of value back in the day, and obviously it is a very respected tool that traders use. So make sure you do a little bit of research on that. Market profile, volume profile, very handy tools to have. I have my own adjustable market profile tool that I use on a day-to-day basis. It was the reason why I went long on gold yesterday, because price came and found support there. So it's just a very handy tool to have. So I'm going to leave it there, guys. Thank you for joining me for the stream today. I hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you are new to the channel. Lots more coming in the future. Thank you. Speak to you soon.
On the court or in the markets, performance is everything. That's why Anzo Capital is helping to power your trading game. Now official partner of the Phoenix Suns.